So, when we started, when you walked in, you told me that this has been one of the most challenging times for you, both personally and professionally. Of course, personally, you've gone through a lot as well, and I'm so glad that you're out of it. But professionally, why would you say that? Is it because of how volatile the market has been? Is it because things are changing every day? Because this is a sense I get from a lot of people that I speak to.
So, one, professionally, we rarely go wrong in both markets. This time we have gone wrong on both the markets. We expected yields to come down. Actually, yields went up. In equity market, we were expecting more correction, and markets held on quite reasonably well. On top of it, you are seeing policy changes coming through from President Trump. I mean, as someone said, डॉन को समझना मुश्किल ही नहीं नामुमकिन भी है. So that kind of geopolitical upheaval we haven't seen. This kind of volatility we have seen, but every time you go through that, it is challenging. The only call which has gone right for us is precious metal. We were bullish gold since COVID time, except 2021 where gold gave a negative return. By and large, that overweight call has worked. We became positive silver somewhere about 8 months ago. That also worked out well. So overall, this is a challenging time. And I think with the current geopolitical scenario, the challenges may continue for some time.
It's been phenomenal, right? The rise that we've seen in gold. And as you said, you got that call bang on. But for someone who's missed out on the gold rally entirely, not just gold, even silver, is there more to go?
I will say it is not yet late to enter into both gold and silver. On gold, the primary call is central banks becoming like Indian housewife. एक बार सोना खरीद लिया फिर बेचेंगे नहीं. The world doesn't have enough gold for Indian housewife and central banks. We believe China at some point of time would like to have more gold than what US today has. China is at about 2,500 tons of gold. US is at 8,000 tons of gold. China won't be able to buy more than 500, 600 tons of gold a year. Effectively, you can imagine what kind of buying power will be there with central banks, and that will keep gold prices high. On the silver side, while there is industrial demand from solar cell electric vehicle, and the supply is getting constraints because of higher mining cost, we are also seeing first dabbling by central banks in silver. Saudi Arabian Central Bank Front bought some silver ETF. Now, if central banks come to buy silver, the upside could be far higher. So overall, we believe in today's geopolitical uncertainty and dollar weakening trade, both gold and silver can be kept in your portfolio.
So, what percentage should one keep in their portfolio? If you had to do asset allocation now for the new year, would you raise your percentage of precious metals, gold and silver? And if yes, what should the ideal percentage be?
So, there's no way to identify fair value of gold and silver. It's essentially a front running for the central bank intervention. We believe with current geopolitical scenario, every central bank would like to keep part of their FX reserves in gold and silver. Western world central banks like Germany, US, Portugal, they have more than 60-70% of their FX reserves in gold. The Eastern world central banks like China, India has less than 10% in gold. That gap will get bridged over a period of time, and which is why one can be bullish gold and silver. Undoubtedly, they are commodity, they'll go up and down. So my recommendation is that maybe 15 to 20% of your portfolio in gold and silver.
Okay, 15 to 20% of your portfolio. But it's really, I mean, it's really crazy. I have never seen in my investing, journey this kind of phenomenal rise, every day record high. So I guess something is changing in the ecosystem.
We haven't seen a dawn also.
Fair enough, fair enough. But coming to the markets, right? This has been a year of nothingness. Like since September of last year, this market has done absolutely nothing. If anything, it's actually fallen 15% and sort of come back from there. So give and take, very flat, time correction in the market. Do you think it could get much worse before it gets better?
So, one thing which off late has been taking some parts of my time is a derating of a company or a country. History has taught us that mighty fall. Eastman Kodak had oligopoly on, films, and today the company barely exists. Nokia had 50% market share in 2007. They had $150 billion market cap, and today they virtually don't exist. Mighty companies have failed in the past. Now, I don't think so there is anyone who has doubt on India's earnings trajectory. Nifty is likely to have about 1200 rupee EPS for FY27. Will it one day become 2000? Answer is yes. Someone will say it may happen early, someone will say it may happen later, but it will happen for sure. The challenge is that will we be able to maintain our P ratio at 20? 1200 into 20 is 24,000 Nifty. What if we go to 2000 earning per share, which is certain, but my P ratio comes down to 12? Then Nifty will be still 24,000. A lot of focus has gone into earnings, but I think it is time where not only India, but India Inc. also focuses on maintaining this premium valuation. We should not become Nokia. We should not become Eastman Kodak.